All right. Hello, everyone, and thank you for continuing to join us throughout the day here at the Lytham Partners Spring 2024 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. I'm extremely pleased to be joined by who I think are three of the leading investors in the space here. Well, I'll sort of go around the room here and introduce everybody. First off, we have Ryan Ruggaard. Ryan is Director of Research at Ruggaard Associates. Next, we have Chris Abbott. Chris is a portfolio manager at 1035 Capital. And finally, we have Matthew Shefler. Matt is an analyst and general partner at Investment Strategies Fund. I've asked the three of them to join me here today to really talk about some of the trends sort of taking place in the industry, maybe how they've adjusted their portfolio management and their research approach, and we'll sort of get things wrapped up with an outlook for the next 1 to 2 years here. So, let's sort of dive into it. We've only got about 15, 20 minutes here. I'll start off with you, Ryan. Given the market conditions the past couple of years, which have been ugly for most micro small cap companies, not all, but for most, outline some of the key adjustments or maybe refinements you've made to your investing strategy, and what were some of the factors that impacted or prompted these changes? And Chris and Matthew will follow up with you afterwards. So Brian, go ahead and start.
I think we're not unique in this regard, but I think a lot of investors place a lot more emphasis on the balance sheet of micro and small cap companies, given that the liquidity window of capital markets has been relatively closed over the past year or two. That started to thaw, and you're starting to see more companies raise and be able to have funds. Micro and small cap companies are usually challenged in this regard because they're always told to grow, but don't always have the resources to do so. And I'm sure executives listening to this call can sympathize with that. But now you're starting to see the opportunities out there if you can put together a story and you can illustrate why and how you're going to use capital effectively to be able to grow your business. I think it's an opportune time. So investors have focused on the balance sheet, but they've also focused, I think, on the cash flow profile of these companies. And the companies are responding. If you look in the micro and small cap space, a lot of these companies that were unprofitable or were burning high levels of cash, they've definitely come down and have been more disciplined with how they're deploying cash, how they're investing resources back into their business. And generally speaking, the market's going to respond to that. They're going to say, hey, there's a lower cash burn with this company, the quality is going up. Because as we know in micro and small cap, you can't look at them as the same level of quality as large cap. You can't say, oh my God, this could be a 15% return on invested capital business. It doesn't happen with all the companies. If you decile by market cap, you would never invest in the smallest companies out there because they're the lowest return on invested capital on average. But the reality is that 60% plus of the S&P 500 started here. So, if you clearly got to that point from the microcap space being below 300 million market cap at some point in their history or time, it's totally possible to become a higher quality business over time, but you can't expect on day one that, the ugly duckling is going to look like a swan. It takes time for a lot of these companies to develop and to be able to invest the resources and ultimately grow. And I think with the U.S. economy like it is, they have the opportunity to grow. The capital markets are more open than they were before. And so I think it's a generally positive trend, but definitely the cash flow and balance sheet statements have definitely got more focus in the last 12 to 24 months from, I think, the larger investment community, not just ourselves.
That's a great chat. 60% of the S&P 500 companies today started out as micro-cap companies, right?
Yes.
Sub 300 million micro-cap companies. Incredible stat. Chris, anything to sort of add on to what Ryan just said there?
Oh, that was some great stats, and I definitely agree with the debt and the cash flow profile being very high on investors' minds over the last couple of years. So what I did is I actually really reverted inward and spent a lot of time automating my process so that I could replicate myself in more areas, right? There's only so many of me, and the way I can replicate that is by automating everything. And it's been great. One thing that was born out of that is actually I started a Substack called Unloved and Underfollowed. Every week I send out 250 charts, and it gives you kind of an overview of the market, not a lot of commentary, so you can kind of form your own views. And then I write 4 to 8 articles on unloved and underfollowed stocks, aka small and micro. So really, where I spent a ton of my time in improving my process was how do I sell these things better? Because really, that's where I got hinged in 22 and 23 is maybe holding on to some of these debt and poor cash flow companies too long, and it really hurt me. So I spent a lot of my time going back to my roots and automating. How do I do a better job of A, following all the stocks, and then B, selling stocks without an emotional tie to it? And the answer for me came to automation, and kind of happy coincidence. Now I've got a Substack, and it's a fun way to get that data out there for people because it is difficult to come by good small cap data, especially if you're not in a big shop where you're willing to spend, hundreds of thousands of dollars on data providers. So.
Yeah, absolutely. And Matthew?
Great. Well, let's see. I invest, across the cap space, and I guess my sort of central approach has been valuation, a lot of trailing valuation work, and then re-rating, looking for catalysts, what can drive change. And I've come to believe that the trailing analysis today is less relevant than it's ever been. Now, the reason I'm saying this is I bought into the fact that we're in a very unique, powerful technology cycle, cloud plus AI. I think it's really transformative. And so I think yesterday's rules don't apply. So I think one of the challenges for smaller companies that I see is just considering them in the context of their kind of larger brethren, and making sure when I'm investing in this space that I understand that there's a TAM that is kind of theirs. There was an old Northwest Airlines motto: "It's cold, it's dark, it's all ours," and that just there's a way to kind of proceed in the market. And I would just say generally, as I look at my investing in larger companies, I've had to realize that companies like Amazon were profitless for so long because the market gave permission to them to reinvest, both capitalizing and in their regular expensing, in the future, to be able to sort of grow in what was a sort of a green space. So smaller cap companies really don't have that permission, or may not have that permission. So in this context, I think it's very important that any company that I'm invested in, the management is going to tell a story that's not a snapshot, not a freeze frame, but essentially a progression of where we've been on our journey, where we are, and where we're going.
Yeah, let's hit on a point that you just talked about there, Matthew, which is sort of examples of industries that you've shifted your focus to. You talked about cloud computing, AI, et cetera. What sort of industries have you moved towards? Maybe what industries are you moving away from in today's environment?
Yeah, it's interesting. I would say that I am generally looking for some more scale. But for me, the opportunity to invest in small caps is access. So generally with FD, it's kind of tougher. I think it's tougher for many investors. Quarterly conference calls, everybody's on very good behavior. The really good opportunity for me is to look at individual situations in the small cap, particularly where I see management change. And an opportunity to take something that has existed, that has been able to withstand the test of time, but now may somehow directionally, be poised to grow elsewhere or come up with a new plan to grow. I think the comment about so many companies, small cap companies, turning into these large caps is really interesting. And I guess for me, understanding how we're going to get there from A to B, and understanding if we have the resources, the balance sheet, cash flow to get there is critical to that.
Yeah. Chris, maybe expand on your thoughts. Any industry sectors that you're moving into or moving away from?
Well, I'd say I'm kind of constantly in flux from where I'm going or where I'm moving. It's one of the things I do a lot of is kind of thematic investing. So I'm in one theme, out of another theme. One that I've been getting into and having a fair amount of success with, although might be getting a little long in the tooth here, is uranium and the idea of additional nuclear power coming online. I'm actually more interested in the enrichment portion of it than I am necessarily in the miners. I think there's a different play there, but the enrichment portion is an interesting bottleneck as we move forward, and there's not a lot of players in it. So I think the players that remain are very attractive because they basically they will run the show there, and they're all relatively small companies. There's no large cap companies that do it, and the primary supplier for a lot of this stuff is actually Russia right now, and we all know that's not where you want to buy any materials, let alone nuclear materials right now. So I'm really interested in the uranium space, specifically in the conversion and the enrichment. So that's one space I'm in. Kind of related, one space I got out of, and I think we'll all know why, but the green energy transition, I was never big in it, but I had a few solar installers, and goes back to my previous comment, sell better. These things really fell apart when tariffs came in and the rules of the game changed. So a lot of those actually ended up going bankrupt. Glad I got out when I did, but could always do better. So it's interesting to me as I look at the world in kind of a thematic view. I'm always moving from one to the other. It's not necessarily due to this time per se.
Got it. And Ryan?
I would just expand on some of Chris's comments. I don't think we're specifically uranium or specifically solar or specifically wind. But if I told you in the last 30 years that the U.S. electricity demand hasn't grown, most individual people would be surprised, right? We've gotten so much more energy efficient as a country, but now all of a sudden you're finally seeing this inflection point in demand. And the question is, how is this going to be met? Whether it's going to be solar, whether it's going to be wind, whether it's going to be uranium. So I think a lot of investors are asking these questions on how is the electricity demand of the future going to be met? And if there's more AI and there's more tech and all these spaces continue to develop like they do within data centers, I mean, we're going to need it, and we're going to need to be more energy efficient. So I don't think it's necessarily one industry is a solution, but you kind of, like Chris said, you look at it from a thematic way and say, hey, how are we solving the problem? And what companies are taking advantage of solving those problems? I think a similar thing can be said in the aerospace industry today. Who knew that in 2024, travel will be exceeding 2019 peaks and we'll all be flying around the world again? It seems like a very strange viewpoint if you just go wind the clock back 2-3 years ago during the pandemic. But Airbus and Boeing can't build the planes fast enough to be able to meet the demand for travel. And, I think naturally as humans, we're inquisitive people. We want to be connected to the world. And that's one industry that's kind of seeing a inflection point. And then within healthcare, I think there's also been a shift, and that specifically is happening within sort of the growth sectors of healthcare, because in the past, we were very pandemic focused. We were very focused on the solutions to today's problems. And now I think we're getting back to solving some of the bigger problems within healthcare. How is this going to, how are we going to make healthcare more affordable? How are we going to continue to drive treatments forward for a number of innovative things to, improve life expectancies around the world? Those are just some examples.
Right. Great insights there, guys. The audience here, probably a combination of investors, but also public company executives. And Matt, you and I have had conversations over the years as it relates to how companies, management teams should be presenting themselves, right? What sort of advice would you give to a public company executive that would be listening to this and say, this is what you need to be doing to better attract investors? And obviously, Chris and Ryan, I'll get your thoughts here as well.
Well, good. I will say, I think the opportunity generally that I see is a lot of small companies is their nimbleness and their TAMs that may be protected, or their markets, and candidly, the obscurity of their paper. So, if I could be, as an investor, somewhat early to recognize change, that could be, that's where I see a lot of the opportunity. For me, once I make a decision to invest in a small cap company, I typically think of myself as being stuck just because of, the liquidity of the situation. So it's important for me to kind of know what I'm buying as best as I can, to the extent that I can even understand it. So I would say a few things about your question, Robert. One, I think last year's, or the investment deck from 2 years ago, is probably no longer relevant. Things are changing. I think a lot of companies that I see, big and small, their segment analysis that they present to investors is dated. There may be more happening in distribution versus, kind of demarking what's happening in some product line. So I think a lot of effort needs to be spent to say, okay, what is it that we're really doing, trying to do in our plan? How are we managing the business? And does our presentation really, show that off? And does inside equals outside? I see a lot of presentations in companies, big and small, where you get a freeze frame. This is where we kind of are now, and maybe with some direction about the future. I think you got to go, particularly for me, for a small cap company. If I'm going to get involved, I have to go on a journey. I have to see that a company or a management team can true up to kind of some stuff, some mistakes they've made. I make investment mistakes all the time. What were some of those mistakes, challenges, how we've overcome them in the past? Where are we now? And then this plan we have for the future, if you can provide a plan, that gives me something that I can then go kick the tires, both with the management team and independently. So I want to see, a fluid presentation that takes time into account. And I would just say I'm seeing a lot of companies, mid-size and larger companies, that are coming out with 3 to 5 year plans. That may be very tough, and for many companies, but I think some visibility so that we as investors can go back and say, okay, what worked out, what didn't work out. Of course, things are going to change. Managements are going to have to tack, but I think I see fairly little guidance from a lot of small companies. And I think that would be at least aspirationally good to do. The last thing I'll just say is an old research director of mine used to say, investors need to be led. We're followers. We're not doing what these companies can do. So, help me refresh your presentation and make it relevant to what you're doing, where you've been, and where you're going.
Chris?
I'll just build off a couple of things that Matt said. I'm very focused on catalysts and change of the companies that I invest in as well. So it sounds like to some degree we're going to think similarly. But I think for a lot of small cap teams, yes, you need to provide guidance. You need to take every opportunity you can to talk to your investors, because I think you mentioned it earlier, a lot of these companies just aren't known. So if you're passing up opportunities to talk to your investors, that's a big mistake. Think 4 earnings calls a year at a bare minimum. Okay. The next thing I'd say is, speaking to investors is a skill like everything else. Not everyone has all of the skills. In fact, no one has all of the skills. So don't be afraid to go out there and hire someone that does have that skill, because so many small cap management teams, they're operators or they're the founder, and that's their skill set. They really understand that portion of it, but they don't necessarily know how to translate that into, well, what the heck does an investor actually want? So I would suggest, hey, don't be afraid to go hire some expertise. And then if you don't want to do that, I'll give you 3 tips that will help you no matter what. First is try to understand who your investors are. If you've got value guys, they're looking for different things than a go-go growth guy or a turnaround guy or a catalyst guy. So if you can really understand your investor base, look at who the big shareholders are. If they're index funds, you're not getting your story out there to the active guys. And your share price probably isn't going to change much, because you're not going to get much of the flow because you're such a small company. Okay. So first things first, who are your investors? Speak to your audience. The second thing I would say is ultimately the investors, some of them are nice, some of them are mean, some of them are assholes, but we're here to make money. Okay. So to Matt's point, lead me along. Let me understand what you're doing that's going to help me make money, frankly, right? And what's the catalyst? Let me know what you see as the inflection point. And then whenever you talk to an investor, every answer should come back to, well, how does that affect the bottom line? Oh, we're going to add a new product. That's going to help us with sales. It's at higher margins. We're turning around this business. Why? Because the sales and the margins are terrible. And if we get rid of this, then the rest of the business looks better. Every answer should come back to, what am I doing in the business to improve the investor's return? That's what matters to the investor. The rest of it, it's nice. But what matters is, how do you make me money? And then the last piece I would say, and I would say this in context to Matt's comment, is when you're doing this guidance, whatever it is, if it's next quarter, if it's 3 years out, if it's 5 years out, you do yourself more harm by over-promising and under-delivering than you will ever do by under-promising and over-delivering. So I know sometimes you're excited at small cap, we have huge opportunities. I know it's hard to not get over your skis, but take it down a notch. No matter how excited your investors, your analysts are, always, always, always try to under-promise and over-deliver. that will get your stock price on more people's radar, or your stock on more people's radar, and that will lift the price more than anything else you can do, probably.
Yeah, 100% agree. Ryan?
Well, I think there is one thing that companies can do that's low-hanging fruit that would get it on more people's radar than anything else. And that's putting the investor presentation on the first page of their website. The amount of companies that can't do this simple task is astronomical. And everyone on this call will 100% agree with me on this. If we can't find it and we have to dig for it, you're already doing yourself a disservice. The second part is on TAM. So that everyone knows that a lot of these small companies have a large total addressable market out there, probably in the billions of dollars. And you probably have 1% market share today, or even less, in these kind of categories. Break it down for us. Why are you going after the billion opportunity? Why aren't you going after the $100 million opportunity that you could own the market and own this particular niche? I think companies do themselves a great disservice by saying, oh, we have to get to the $1 billion. Well, maybe down the line in 5-10 years, you can expand kind of the market, add products and services that address more of it. But like, talk about today and how there's a reasonable TAM that you can achieve within sort of that 3 to 5 year timeline. A lot of my co-investors here talked about. And when you take that and you break it down, then you sort of can set goals, or you can set expectations on saying, hey, this is what we're doing today to get where we're going. Because it's connecting the dots. When you drive a car, you go from point A to point B, but you almost never talk about the endpoints. You talk about the journey, right? When you have a conversation with someone, you don't say, oh, like, I drove from New York to LA. They're going to ask you about everything in between. They're never going to really ask you about how was New York and how was LA. They're going to ask you, how did you get there? And so I think more companies need to explain how they're getting there and make it easy for investors to digest and understand what that is. And that means keeping the deck simple on what the steps you're taking to get there. I think Matt brought up a great point about mistakes, owning up to, your past faults. And it's really not that we don't care that you made a mistake. Everyone on here makes tons of investment mistakes. I think I'm wrong probably 40% of the time, and that's pretty good in the investment community. But we own up to it and say, what did we learn from it? And we're gonna, like, if you go out and you commit the same mistake again, I ask, did you learn anything from it? Because that's, I think, what the most important skill set of a leader is that you learn from your mistakes and your team builds upon what they're learning, because this is a cumulative process of developing a company. It's not built in one day. If we go back to the journey from being a micro cap to a large cap company, for most of them it takes 20 to 30 years. So it's not like the next year you're going to be there. There are some exceptions to the rule. I invested in Celsius as a company in 2019, and that went from a micro cap stock to a large cap stock, but that is totally the exception to the rule, and it doesn't happen every day, and probably will be one of the better investments I've made in my career. But it takes time to build a company. Rome was not built in a day. So take it with a grain of salt that you're not going to get this right on day one. But if you continue to build, you continue to plan, you continue to show investors how you're going to go about the small building blocks to build a bigger palace of a company, I think people take you far more credibly.
Great insights across the board.
Robert,
Matt.
Robert, yeah, I just wanted to respond to something Chris said. I thought it was really an excellent point about kind of the resources that companies have. And, I've seen you operate, and I think, having a pro help oversee is super important. And I've seen that from what you guys do. But, one of the things I do say to companies is, why somehow this is a sort of the investment telling of the story process is sort of hermetically sealed or isolated in some way. And I would just think for small management teams or companies, smaller cap companies with, kind of fewer employees, to what degree is the manager, the CEO, saying to his team, and maybe the top 20 or 30 people in the company, help me better describe what it is that we're doing and what our success is. And what success will look like, and that would get them involved clearly, perhaps as holders and more believers. And also say, there's always tempting sometimes in terms of guidance to talk about guidance in the form of some, top line number or some margin number. There may be some transitional handles that that will basically represent where the company is trying to take the business, that if they're presented regularly, I mean, they may change, they may change in 18 months, but for some period of time to identify them and say, here's an intermediate metric, that can be very helpful, and show a sort of responsiveness to investors as well. So thanks.
Fantastic points across the board, guys. Let's sort of close with each of your outlooks here, maybe for the next 12 to 24 months, and I'll give you the opportunity to give one caveat of sorts that what might impact your outlook if we go back and play this in a year or two. So, Chris, I'll let you have the first stab at it.
Sure. Well, when I look across the market, I really think that small, micro, mid cap is where the opportunity is. I think maybe I'll differ a little bit on Matt with Matt on this. I think the opportunity is in the small companies for a couple of reasons. One is it's like the cheapest valuation relative to large cap it's been since 2001, which we all know was another famous large cap tech bubble. Not saying necessarily that we're in a large cap tech bubble right now, but there's some similarities, let's say. Then you look at an absolute valuation basis, it's also small cap and mid cap that are quite cheap, whereas large cap is quite expensive. The larger the company, the more expensive, generally speaking. And then if you look at it over the midterm, your number one determinant of investment returns is what you paid for something. So to me, it seems an odd decision to want to make the bet that this time's different and I'll pay up 30, 40 times for it. It might work. It might work really well, but things have to go perfectly. There's the saying in investments, price for perfection. And that's what, in my opinion, we're seeing in large cap, and especially when you get into the mega caps. What I see in small cap is we're priced for near disaster. Okay. And if you go back and you look at 2008, at the various different times that the market's bottom, you see that on a valuation basis, it doesn't matter what your market cap is, you bottom about the same multiple. Typically on a PE, you bottom in a really bad recession, it's 10 to 12. In a medium one, it's 12 to 14. It doesn't matter if you're large cap or if you're small cap. So when I'm looking at large cap trading in the 20 handle multiples versus small cap in the 14 handle, I'm like, 30% downside versus 50, 60% downside, right? Of course, there's also going to be earnings risk, and I think there's definitely more of that in small cap. But the nice thing about small cap is every company is doing something similar, or not something similar, they're doing something individual, right? They've got their product, they've got their end market, they've got their thing. And those things aren't always dependent on the broad market. Whereas in large cap, it's very hard to outgrow the economy, or not to outgrow it, but to grow when you're dependent on the economy. When you do a lot of different things and you're involved in a lot of different businesses, you need the economy to work out. For small cap, I mean, for example, I own a company that will benefit if credit delinquencies increase. Okay, there's not a lot of large caps that you can make that specific of a bet. Okay, but in small cap, there's plenty of those. You can put a portfolio together of that. So I'd say high level view, I think the conditions are approaching for a small cap bull market and a longer term small cap bull market. And I think the opposite conditions are happening in large cap. And then just to kind of layer onto that, what I would say is the common consensus is that the largest guys with the most access to capital are the ones that make the innovations. So if we're going into a tech world, that's where these things come from. And that's just simply not true. You look at Google, who owned 90% of the AI engineers through their DeepMind business. They didn't create ChatGPT. It was OpenAI, who was founded by Elon Musk with a $50 million grant. And then somehow they became a for-profit company, but that's a different conversation. But the interesting thing there is it was the small startup scrappy group that made the innovation. And then you just saw ChatGPT-O come out not too long ago, 4.0, I guess. And again, it's the small group that makes the innovation. It's not the massive innovators, or the massive behemoths, the Mag 7. Those guys buy the innovators. That's how it gets there. And I'll say another example from my trading history. I owned a company called Mellanox years ago. Mellanox had this cable called an InfiniBand cable. That InfiniBand cable made them ungodly wealthy. They made a lot of money. Now, eventually a company called NVIDIA bought them. Now that InfiniBand cable is the unlocking component to the H100 chip. Without it, it doesn't happen. It's not NVIDIA that invented that. It's the smaller companies that are scrappy and startups. And then the last thing I'll just say is, I think broadly speaking, we're entering a phase of deglobalization, not more globalization. What that, in my opinion, is likely to do is globalization was a tailwind to larger companies. They could take advantage of it better, and a headwind to small companies. As we go away from globalization into a deglobalization phase because the world is becoming more dangerous, look at Ukraine, Russia, China, Taiwan, in my opinion, will be a bigger deal soon. And then we also have, of course, Palestine, Israel. The world is becoming more dangerous. We will onshore more of our manufacturing. It's small and mid-cap companies that will take the risks to make that. And ultimately, they will be the ones that benefit from having that small and mid-sized manufacturing. That's what gets added onto. And ultimately, they'll get bought by the behemoths that have better access to capital and more strong balance sheets. To me, it is quite clear that where we are going is small cap favorable, not large cap favorable. Not to say that I think every large cap stock goes to zero. That's certainly not what I'm saying. But when I look at the conditions, I see favorable conditions setting up for small cap, and I see headwinds forming for large cap.
Ryan.
So on the back of that, I'd make a few comments. So he mentioned on the valuation side, that if you buy up at these 30 times PE, it's hard to make money. And that is true for a lot of cases. But the longer your investment holding period, the more that matters is the underlying earnings growth for these companies. So if you would have bought Walmart at any point in its history in the 1970s and going into the 1980s, you could have literally bought it 30, 40 times PE and still made a great investment return far above the S&P 500 at those points in time. But guess what? It was a small company then. It was a growing company then. So going back to this whole narrative on small cap, these companies have long runways to be able to reinvest. I don't think the same thing can be said about the Mag 7. They've shown that they can invest capital and that they have opportunities to do so, but to really have that multi-decade runway to do so, I think is far, far more difficult. The second point he mentioned, Chris, was on the globalization versus localization. The smaller market cap you go, the more, and this is true globally, the smaller the market cap you go, the more local that country or that company's revenues get. So if you're going and buying the smallest companies in Greece, or you're going out to Hong Kong and buying the smallest companies, they derive most of the revenue from that local economy. The larger cap you go, the more global you become. So if you're concerned about the globalization in the world, and you're concerned about where it's going back to being a more localized economies, why are you investing in large cap would be my question. Because the small caps are really the ones that out there that are already in the localized economies and already have the manufacturing footprint here in the United States. So this whole reshoring narrative, most of these companies already are up in Milwaukee or in the South and not in some of the other historical manufacturing centers within the United States. And so with a lot of these companies, and I think over the outlook, the U.S. economy is still pretty good. We still have, I know interest rates are higher. I think that's actually probably a little bit of a discipline thing for people's capital allocation, that they're making better investment decisions because they're mathematical, to get to their net present value. They have to kind of have better opportunities out there. And I think that's slowed down some of the decision making that maybe 2 years ago, you were just throwing spaghetti at the wall and seeing what sticks. And it's especially true in small cap that if we go back to that part about capital resources, small cap companies don't have a lot of those resources. And I talked about at the beginning, the liquidity window is opening up. You might be able to raise money, but you're still not going to be able to raise like what other people do in the mid and large cap space. So you're going to have to be the more decisive or at least focused on what you think the opportunity is and putting resources behind that. Because in a lot of these cases, companies try to throw things broad, and really in small cap, it's about being focused. And if it doesn't work out, guess what? You can be nimble. You can change your business model. Amazon didn't start as AWS. They started as a book reseller. How they got in a data center is, a story for another day, but it's a perfect example on how these small companies can pivot over time. So I'm definitely on the small cap train. Regardless of what the valuation differences are, why would you not buy the one that is going to have the better earnings growth over the next 5 to 10 years and to continue to come out with the innovations.
Fantastic. Matt, why don't you wrap things up here for us?
Yeah, I would say I'm more agnostic in terms of small cap, large cap. I kind of don't really think that way. I will say I worked at Neuberger Berman for a while, and a manager, one of the partners there, who's no longer with us, Bob Appel, would sort of scold us when the new crop arrived, and he would say, what makes the stock market different than all other markets? And he would then refer to liquidity. So I learned very on that, I may not like the price, but at least I can get out. That's a little more challenging on the small cap side. So for me, I see small caps as I really have to force myself to look at them mostly either as a piece of paper or an option, a piece of paper that's going to return value either by milking the business and generating cash through dividends or selling of the company, or take a shot on somebody who can grow, perhaps with a new management team that's got a plan, that has a business that has been defended. And in terms of, I grew my business by building an automated approach to rebuilding cash flow statements for publicly traded companies. Every company that I look at that I have a position in, I basically take in all the cash flow, the original cash flow data, and I rearrange it so I get to some notion of recurring cash flow. I think that's kind of less relevant today, because I think it tends to be more backward looking. So for me, where I've come is, if you do buy into this technology change, then yes, I think you have to look at each individual company. I tell some of my investors, if you add up Comcast, Cox, and Disney and look at their advertising revenue in last year, trailing 12 months, was $21 billion. And Amazon was $47 billion. The world has changed. So the challenge for me is, yes, rather than, look, I have to invest a fair amount of time. And for me to grow a big position, I have to think, okay, I have to have a lot of confidence. So either demonstrate to me that you've got a plan as a small company to return capital to me that's sustainable, or sell me on a growth plan where you go out a couple of years. And, I'm interested in a flyer. And in fact, I agree with both guys. I think there's much better value in these if you get some winners. And my best performing stocks this year have been small cap stocks. Best. And I own NVIDIA. Okay. So, just to give you a sense, I didn't buy it at exactly the right time, but I do own it. So I would just say I see the opportunity. I think the story is super important to me. I'm ready to buy in, but tell me a story that I can, one, understand and then track over time.
Fantastic. Well, guys, incredible conversation. Thank you so much for sort of getting things kicked off here for us today. We hope you guys, the three of you, enjoy the conference here. We hope everyone listening enjoys the conference here today. Again, I appreciate all the insights and the times that we've had private conversations as well about many companies, which really led to this discussion here today. So again, thank you guys so much. We hope you enjoy the conference. We'll talk to you guys again here shortly.
Thanks, Robert.
Thanks, Robert. Thanks for having us on.